Hey there, savvy savers. Here is the shocking revelation for you. Did you know that the money sitting in your savings account might actually be losing value? Yes, you heard it right. Your hard-earned cash could be dwindling away without you even realizing it. Welcome back to the channel, where today we are delving into the real reason why your savings account is losing money. It is time to uncover the truth behind this financial mystery and learn how inflation plays a significant role in this hidden loss. Let's break it down. Inflation is the gradual increase in prices of goods and services over time. This means that the purchasing power of your money decreases as prices rise. So while your savings may look the same on paper, their actual value diminishes on paper on each time passing, due to inflation. Let's take, for example, you have 100,000 that you have in the savings account, right? And investing is personal. There could be another reason why you are keeping that amount, but let's say inflation is 10%, right? In other words, the prices increase by 10% in that particular year that you keep that money in the savings account. It means $10,000 in that case, in terms of what that initial 100,000 could buy a year ago, could be just gone due to inflation. It's a silent tax. Now, I'm just giving you this, just to emphasize the point, to illustrate the point. But inflation in Canada, according to the Bank of Canada as of April, it was 3%, right? In other words, it means it went up by 3%. In the US, it's above, let's say, 3.4% as of April 2024. So it changes over time. But now, here is where the plot thickens. Traditional savings accounts often offer minimal interest rates that fail to keep pace with inflation. For example, as much as less than 1%. Now, what this means is that the interest in most of these accounts is below inflation level. So at the end of the day, you are actually losing money. But there are actually other savings accounts that offer as much as even 6%. From what I have researched in Canada. In the US as well, you can get about 5%. I did a video actually to illustrate and give you some examples, and by the way, there could be even more and even less in terms of these other products that offer this. Now, this is a pivotal moment for me to illustrate the impact of inflation for long-term financial goals. And investing is personal. Now, whether you are saving for a dream vacation, a down payment of a house, or your retirement, inflation can erode the value of your savings over time. It's a fact. So it's crucial to explore alternative investments that can have the potential to outpace inflation and protect your wealth in the long run. Now, as I've said, it is important to always do your due diligence, and I always say that I like to look at other options in this case, to say, let's say if I want to buy a house in a year's time and I want to keep and save the down payment and still keep the return above inflation, I can look at the possibility of locking it up in fixed accounts that give me, let's say, 6% interest per year. If inflation is 6%, I'm talking about Canada here. It might be the different case in different countries, right? So as long as, in my case, I like to just protect my money to get a return that is higher than the level of inflation. Now, this information is publicly available, so it's very important to just look up. But also, in my view, I like to put my money, especially in credible and reputable institutions. In Canada, we are lucky; it's well regulated here, and there are actually top Canadian banks here in Canada that offer very good rates. So that's something that I would encourage you to do, whether you are in any part of the world, to do research and see how you can safeguard your money. Now, in summary, savings accounts may not be the most effective long-term solution due to inflation silently eating away your hard-earned money. So it is essential to be aware of this hidden loss and take proactive steps to safeguard your money. Now, saving money also depends on personal finance and investing goals. For example, like I said, some people may just be scared of the stock market to say, what if it drops? And indeed, it can actually drop, right? But at the end of the day, whether in some cases you can keep your money in the stock, in the savings account, you can still lose it, in the sense that even though it's fixed, inflation can erode the purchasing power. So it's up to you, right? And I'm not saying this is right or wrong. Some people may just want to balance, but the truth of the matter, there are other high yielding savings accounts that you can explore. There are quite some options to explore there, and I have shared some of them. Like I said before, you can check those out. You can also do your own research. But now that you're armed with this valuable insight, I encourage you to consider exploring investment opportunities that can help you grow your money and preserve your money in terms of its purchasing power. Share your thoughts on the savings strategy, how you are saving your money, for example, on the comments below. Let's continue this conversation and empower ourselves and make informed decisions. Don't let inflation sneak up on your savings, and please take charge of your financial destiny now. But also don't forget to click subscribe and also check out some of my videos on this channel. You have a wonderful day, and may the markets be with you. Thank you.